Aloha, all you money makers. This is Indar Lang, and we have a fun episode today. We're going to talk about what it takes to invest in your 30s so you can be successful in your 40s and 50s and later on in life. If I told you guys that subscribe button is the only thing that's separating you from financial freedom, because knowledge is power, I'm going to give you all the knowledge so you can succeed in life. So first of all, it's never too late to start in this business of life. You can start, I know millionaires who started in their 40s and 50 years, so they're successful in their 60s and 70s. So it's never too late to start. And real estate in general could be just a side hustle for later on in life. The coolest thing sometimes about real estate is it really excels when you're in your later periods of life, when you've owned these properties for years and years. They're kind of like a silent bank account. And that's the coolest part of it. It's a silent bank account. They're going up in value. It's moving. And just like that money, you should generate your money and just keep that rolling, that money to generate and make more and more for you. I actually just got off the computer and we're paying back an investor about $50,000 in interest that she's made from a particular deal she's made from us. That's 50 grand a year. She could roll that and keep building that to be more as she's been doing, or she can go out and enjoy that. We've had some huge investors that really enjoy their money and keep that money working and live off of that interest that's accumulating. That's a great way. I have a millionaire mentor friend of mine who lends out money, and that's all he does is he lends out his money at a set interest rate, and he lives off of that and enjoys that money. So it's never too late to start investing and start growing your money, and you don't need much to start sometimes. There's so many different ways you can start. The later you kind of keep putting it off, the longer it takes. Often, I even do it myself. We'll do some creative things where there was just a bunch of deals in the mainland in Connecticut. Really wasn't interested in the deals, but I put in an offer that will really structure and really cost me nothing out of this particular deal. But I put an offer in about 10 different multifamily properties, just banged them out really quickly, not really interested in it. And I think investing and growing is very similar. You're going to have your job, you're going to have your life, you're going to have your normal activities of life. So your investing can start off just by simply putting in some offers, investing in something and at a side hustle that is safe and secure. It's almost like it's going to start off just something you kind of do on the side. You're going to invest in a rental, you're going to invest in a syndicate, or you're going to invest with us, or you're going to invest in some stocks or Bitcoin or whatever. It's almost like this little side hustle that it starts off as. And if it gets really great and really passionate about it and really interested, then you can do that full time, of course. But it almost starts as a side hustle. It started as a side hustle for me, and so many of my other friends were working a full-time job and we're doing our normal life, and you kind of got this side hustle that grows and maybe interests you, and if it does, then you're going to put the time into it. Or maybe you're not, and you're just going to keep going. Say you're great at, you're a doctor. You're great at being a doctor. You make a ton of money being a doctor. Don't stop being a doctor if that's what's really producing money. Then you put that money and you invest in that, you make that money for you. Or maybe just have a normal job and you're saving that money. You saved up 10 grand or 20 grand on the side. It's going to be a little longer road for you, but you can invest that money in something secure and something that's going to grow over time. And don't think that it's not an overnight success, guys. 20, 30, 50 grand investment, it's not going to make you, $1 million by next year. If you can, good luck. Yeah, that's great, of course. But think of it as a long-term strategy. We're talking, a 10, 20-year strategy here where you're going to grow that. Something safe, something secure. I refer to real estate because it's just a tried and true test of time. Real estate's always going to be around. People always need housing to stay at. So it's always kind of there for you. And the coolest thing about kind of investing your own money, it's your CEO. You are the boss. You get to choose, how you want to do it, what you want to do, of course, with your hard-earned money. You can set the terms you want. You can put it into a place that You feel more secure. So you're the boss. I was just talking to another investor just now, and she was saying that, oh, I'm like her financial advisor. I'm like, not really. I'm not a licensed financial advisor, but I just love talking story about money, about investing, about real estate, and I just love talking story about that whole everything, from any avenue of it all. Um, and so buying real estate is obviously an avenue you can take, and investing in real estate and being a landlord and so forth. But maybe you don't want to be a landlord. And I'll give you a great example of that. So we own a ton of rental properties in Connecticut. We own 117 doors, and they're cash flowing. They're doing well for us. We're growing rents, and we're doing our whole thing. But we have a ton of equity now sitting there. We just refinanced it, and we're just paying off all our investors. And now we have a lot of equity in that property, meaning we have a lot of value, a lot of money. Equity is money, guys. A lot of equity in these properties. So if we sell these properties, we'll get all that equity back. And we're talking a lot. We're talking a couple million plus of money that's equity sitting there. So rather than let that sit there and grow, we think that strategy is best to sell the property, take that equity out, and then go and reinvest at a 12% return somewhere safe. Some type of nice, safe real estate vehicle is what I'd like to invest in, with maybe somebody else's properties, whatever. We'll find a 12% safe return, and that 12% will actually make us more money than that rental income that's coming in. Yes, we are growing, in appreciation. We already got our tax savings from this asset, but we can take that equity and go invest at 12%, and $2 million at 12% is, what is that, 240,000 a year. So 240,000 a year is a lot better than what that property is currently doing. So the best way to think of it sometimes is what's also easier for that money to be made, for you, less of a headache, less of a management. I don't have to worry about the rentals anymore. I don't have to worry about, what's going on and fixing this and that. It's a little safer in that vehicle. I don't have to do nothing, literally just invest the money. So think of your money that way as well. When you're the boss of your money, how much involvement do you want to be? How much you want to be in that day-to-day? Do you want to be a property manager and managing your own rentals, or do you want to have a property manager managing rentals and dealing with evictions and broken pipes and asbestos or whatever that comes up in rentals? Everything will come up. We just had a property, the city and county in one of those states is trying to condemn a property on us, and so we're hurrying up right away to figure out what needs to be fixed so we don't get it condemned. And it's just the name of the game. Do you want to have to deal with all that kind of stuff? So remember, you're the CEO. Picture every dollar you make as your employee. So every dollar that you spend and work hard for is your employee, and you need to be putting that money to work. So you don't have to trade your time for money. Right now, when we work a W-2 job, even me as a flipper, we have to trade our time and our energy for that money. So when money is working for you, you're not trading time for money anymore. Now you're making sure that money is just moving, working, constantly putting to work for you. One of my friends, it's funny, he has a joke. Anytime his money's coming back for him, he's like, oh, I got to go to work. I got to reinvest our money. So just that idea of constantly making your money work for you, and put it to work. So when you're sleeping, that money's working. When you're out on vacation, that money's working. So think of it differently. You can only trade so much time for money in a day. You can only do so much time in a day. Wouldn't you rather have your money grow, that asset grow, and you can really enjoy? And we have a few investors that do that with us right now. We have a huge investor right now with us that enjoys she invests a lot with us, and she enjoys that returns. Her nice returns, her 12% return. is a huge hefty return she's making off of her money, and she can enjoy that for years to come and live off of that. You know, say you have $1 million invested at 120,000 a year you would be making. Can you live off 120,000 a year? Especially if you're older, everything's paid for, you have no bills. That's a nice lifestyle. 12 grand a month is a nice lifestyle to live off of, with no bills. Of course, you can do a lot with that. So, why, when you buy something, you don't need to know that when you invest your money, you don't need to know that, I'm going to just make $1 million overnight. It's more of a vehicle for long-term wealth, for long-term growth. You're stashing this money here in a safe vehicle compared to the banks, compared to something with a lower return. There's different types of risk of everything, of course. You can be very safe and put it in like a CD or some kind of mutual fund with lower return, 3 to 4% return, of course. You can get more aggressive in certain stocks, of course. You can get into Bitcoin and crypto and the Forex, that whole market of all of it all. But you really got to understand that, and I think you should definitely invest your time and energy in learning that, if that is an avenue. I'm not an expert at that at all, but to me, that got to be money that you're willing to kind of lose or risk to lose, not unless you're an expert in that field, of course. And then there's real estate. There's so many different avenues of real estate to invest in, from buying rentals to investing in syndicates to investing in short-term investors like us with flips, going on with shorter turnaround of returns. So there's a lot of different avenues to invest and put your money to work. And there's other kinds of things. There's REITs to invest in. There's so much different kinds of stuff. You can invest in startup businesses and get into that world of business investing. That's a lot more risky, so you got to have a lot more money into that. But there's some unpopular avenues of investing out there. Say you have you work for a company, and some companies set up an IRA or a Roth for you. Well, they'll match. My dad's company does it, is where the company will pay you 5%, and whatever you put in, they'll kind of match it basically of your Roth. And you can build that Roth, and you can have that invested through their own platform. They have some mutual funds and safe stocks to invest in through their platform. Or the coolest thing about Roth, we have a lot of investors who will pull it out of their Roth, and they'll invest with us. And the coolest thing about that is that the Roth still thinks it's growing, and it has that amount in there, and it's making that interest in that stock or mutual fund, wherever that is invested in. You're just borrowing against it, and you can invest with us at a 12% return, and that way that's still growing, and you do have to pay off put that money back into it, of course, but now you can gain profits and so forth. So you're really kind of double investing your money in that way, and that's a huge way. We have a lot of investors who use their Roth and invest in it, because the coolest thing about Roth is you can choose how you want to invest it. You can't invest it into anything of your own, but you can invest it to other places like us. And we work with a lot of 401ks and Roths that invest with us through our flips, and they make a nice return, and then they can pay back off that Roth and put that money back in that loan that they took out. So it's pretty interesting to know that vehicle where you can invest your money there. And some of the different other securities out there, there's a lot of different other securities out there to invest in, of course. But I'm only familiar with real estate and in this whole avenue of our business. So it's a great avenue. Real estate is just one of those things, obviously stands the test of time. You can see, feel, touch it. You know kind of the basics of it all. You buy a house, at this value, it should be worth that value. In the multifamily and syndicate world, it's very similar. How they're gonna add value. We're gonna add value to this property. It's gonna be worth that much value. It's not. Sometimes real estate is kind of very simple to understand. You can paper napkin the math sometimes, because it's that simple to understand. It is more complex, and in the sense of when you're fixing it, adding values, and doing all this different stuff, but it's very simple math to understand. I'm going to buy here and I'm going to sell there, and I need this much money to do so. It's a great vehicle to understand. In the syndicate models, when they're buying these big $100 million multifamily commercial properties, it's the same thing. It's the same thing. Essentially, the syndicates are big flips. So a big syndicate model where you invest as a syndicator, where you guys, normally it's like a 70-30 split, and 70% goes to the investors and 30% goes to the owners, and you have KPs and all these different kinds of things. They're just big flips. They're just raising differently because they have to raise, $100 million. They're raising a lot differently, and those 3 to 5 years are going to sell that property, and they'll make money on the sale. And all the investors will make money on the sale. The only difference on some of those types of syndicates is you never know how much you're going to make in returns. You never can judge there's different types of returns, but in generally you can't really tell exactly how much you're going to make compared to making a preferred rate of return, like a standard 12% or something, or whatever you're going to make. So just remember, you are the CEO of your money. You need to put that money to work for you. Don't let it sit in the bank. Don't let it just do nothing for you, and start just putting a little aside. And there's other ways you do have money available. A lot of people have 401ks. Of course, we talked about you can take money out, but a lot of people have equity in their houses. As we just talked about earlier, there's a lot of equity sitting in your primary residence. Maybe you have some rental properties that you could also be putting to work. We took equity out of our house, and it's sitting in our projects as a 12% return as well. So you have equity that could be put to work for you to make you more money. Obviously, you shouldn't use that equity from your house to go fix your roof. Instead, take that equity out, invest it, make that money that costs to fix your roof, and then it's just a different way of thinking, guys. So you're putting this money to use. Instead of spending it, you're putting it to use to go get the things you want. We had an investor one time who invested with us and needed a new car, and he had equity in his house. And I was like, invest. He had $300,000. He took $300,000 out, invested with us. It was a 10-month project. We turned it around in 10 months, and he made about $30,000 in that deal. Took that $30,000 and went and bought a brand new car. So it's just a different way of thinking, and that's what we're trying to change your mindset. There's a great story I'll leave you guys with. The average person is taught to go buy a vehicle. He has 20 grand. He goes buys a vehicle. That's what he's taught to do, right? Instead, that 20 grand, he goes and invests in a rental property. That rental property is now producing $400 a month net cash flow. He takes that 400, he goes leases a brand new car. Now he has a brand new car, he has a rental property, and that property's going up in value. The car obviously doesn't go up in value. And now he's just got a property and a car instead of taking that 20 grand to go buy the car. So just different way of thinking of your money and putting it to work. We're not taught that way in school. They kind of don't talk about that generally in school. I don't know why. I can't tell you what the reason is, but you want to think of money differently, and the movement of flow, of ebb and flow of it. Where's it at? What's it doing for me? I invested in a deal with a partner of mine in the mainland, and that investment didn't go well. We're breaking even. We're going to just make our money back. But to us, that is still a loss, because that same amount of money could have been invested someplace else and been making us money. So recognize that your money needs to be making your money. And if you're just breaking even, on a deal, that is a loss. So think of it that way too. So you have equity, you have Roth that you have access to. You can get lines of credit from the bank. If you have a business, you can ask your family and friends to, invest if you want to learn. So get out there, move that money, create that wealth. It's not going to be done through a job, unless you own the company and you're growing this huge business, or you're a big CEO, big shot, So move that money to make it work for you. Question Q&As. So in this segment, we have a Q&A. We have a somebody who asked a question. How do you feel when people say "must be nice"? I think what they're referring to must be nice. You must be nice that you make $1 million, or must be nice that you do this or that. It's the same stress. It's the same lifestyle as if you're making money or not making money. It's not easy, so that must be nice could be you don't know what it took to be must be nice. So you don't know how much sacrifice and how much stress or how much risk or ups and downs it did to take to get that person to wherever they're at. So I know the struggles of it, and when I see a big Jeff Bezos or Elon Musk, or whoever, these big type real estate or whoever tycoons that you may see, you don't know the struggles that they took, or the down and out times that they were on the break of bankruptcy to the highest point to where the career they're at now. You don't know the struggles, and if you're willing to put yourself through that, then you would know. You would know that it's not as glamorous as and easy as it may seem on Instagram world. So it is not just must be nice. It must be nice because we struggled, took risk, we pushed our limits, we did more than the person next to you. And there is always somebody who's going to do more. There's always somebody who's going to be bigger and better. And I just want to better myself and be a best person I can be. And I'm still continuing to grow and learn myself as well. But it must be nice that you can do this. Well, I worked hard for some of this thing, and I'm not saying people haven't worked hard. I'm just saying that I worked smarter or worked differently, and I went into a different path. There's been times when I have not received any money at all for like 6 months, so when you're first starting out, you really, it's a tough road to grow a business and to keep growing it, and to putting that money back into invest into the business, to putting that money back into what you're doing, your craft. It's not an overnight success by far, but you can do it too. Just willing to take that risk, putting in extra time, spend those late nights, and doing more than you possibly think you can do. Segment 2, deal of the week. So deal of the week, we do have our multifamily deal that I think we're just wrapping up. We do need a few more investors. I think we're just closing that out, and we have a Nihi Street deal that we're trying to fund, and we also have we just locked up a Haina Uka 1144. I can't think of the name right now, but we just locked up a deal as well that we're going to be putting out there on the portal. I think she's putting it on our portal right now, as you guys can see. We're looking for deals, investors for that as well, and looking for deals always. But love for you guys to be a part of our team. Check out our portal. Check out the deals we have on there. And yeah, message and comment, and please subscribe and like everything below. Really appreciate all the comments and appreciate you guys out there. Aloha. Have a great day. Aloha.